Thank you very much for joining us here on Rush Hour. Our top focus, the US economy contracted at a 0.2% annualized rate in Q1 of 2025. This is a slight improvement from the initial 0.3% decline estimate. This is according to the Bureau of Economic Analysis. The slowdown, driven by a record trade deficit from pre-tariff import surges, marks the first negative GDP reading since 2022. But despite this, consumer spending and business investment showed resilience, with economists eyeing a potential rebound in Q2. But I'm given to understand my guests are joining me this evening. Let me take the opportunity to introduce them. Santosh Rao, Head of Research and Partner, Manhattan Venture Partners. I'm also given to understand in a couple of minutes we will be having Arnab Das, Global Macro Strategist, EMEA, Invesco, joining us as well. But Mr. Rao, thank you very much for taking the time out and joining us here on ETNA this evening. Let me ask you this, is this 0.2% contraction a blip of signal or deeper structural risks in US trade exposure? How are you looking at this?
I'm not looking at it negatively.
Okay.
There's always some correction always that happens. I think this quarter, the second quarter, is tracking at 2.3% according to one estimate. So I think that's okay. I mean, the thing there was some disruption. People were cutting back the production, manufacturing, and all that. There was some disruption, some uncertainty regarding tariffs and whether to go forward, not. There's things like that. So I would say there was a lot of noise this quarter. That definitely played a role in the GDP overall. But I think overall, it's not a concern at this point. Other things are still tracking well. Employment is still good. Sentiment is slightly soft, but still good. And retail is holding up well. So I think overall, I would say it's not a concern because the underlying fundamentals are still holding up pretty well.
And you, of course, your perspective being you're not looking at it in a negative way, but is this contraction telling us that consumer strength in the US is starting to show signs of fatigue?
Yeah, that's been on the cards for a while now. With all this rhetoric and volatility, people worry. And then we had a spate of layoffs, cutbacks, the Doge program that Trump had. There were a lot of layoffs in the government. So there was some rationalization going on. So yes, there was a sense of things slowing down, things were getting bad. The optimism that was there was coming down. But overall, I think at the back of it, Trump has a lot of pro-growth policies that he wants to bring to the table. I think all that should play well. I think that's the hope. That's what the market is expecting. At this point, I would say, yes, any slowdown is not good, but this could be a correction of sorts because of a lot of noise this quarter, first quarter. And then I think the second quarter numbers is going to be important because we'll have, and especially third and fourth, because there'll be a steady state. And let's see where this tariff talk and court cases land. At this point, the government is saying that there is a workaround and they're going to appeal and they're going to go forward with what their plans are. But yes, it definitely puts a pause on that. So it won't be a blanket across the board reciprocal. It's going to be more. It's going to be more thoughtful and very not as disruptive as originally thought, the tariffs. So that's a good thing. So I think the market is expecting a lot of things, still a lot of uncertainty. You're going to expect a lot of volatility at this point, but let's see where everything lands at this point. I'm not worried.
You're not worried, but then you did point out about the uncertainty. So do you see trade policy uncertainty reshaping investor sentiment, in your opinion?
Yeah, and investor sentiment is I wouldn't say it's negative. It's the market was coming back anyway. It was pulling back to a more reasonable multiple that was expected. The technology stocks were pulling back. I think with Nvidia results last night, I think that goes to show that AI is still in play. And so I think you will see that technology will continue to drive the process forward. But let's wait and see where the tariffs is because that's a big thing. If the prices go up, then consumers are going to hold back and things like that. So I think there's going to be a domino effect if consumer expects and the investor expects that the sentiment is going to be down. Let's wait. Let's see what the CPI report coming up. It's expected to be reasonable. It's not going to be a very hot number. So I think that's good. So if the inflation is under control, and GDP is expected to be at 2.3% this quarter. I don't think the market is going to take it. The market is going to like that, and I think we will. The second half will definitely be good.
That's an interesting take, but then could aggressive tariffs in fact backfire by amplifying inflation and weakening real demand?
Yes. See, tariff is a one-time shock on the system. It raises
Right.
prices, but then it kind of stabilizes. People adjust to that. Uh, any aggressive tariff is tax on demand. Contrary to what the Trump administration is saying, there's not much revenue you can have because people are going to cut back if prices go up. So that there is a negative effect to that. But I don't think we'll have a massive tariff. He's going to be very selective. He will definitely have because he ran on that. So he's definitely going to have some way or the other. But it's not going to be the crazy 40-50% tariffs that he's talked about. It's going to come down. It's going to be more reasonable. He wants to level the playing field. And if he can get an off ramp and saying that, okay, now the trading playing field is level, I think he'll get off that. He won't be very aggressive. I think that's what the market is expecting because in the past, in fact, he's getting a reputation of backing up, backing away. He comes with a shock and awe announcement, and then he backs away and gets back on the mainstream. So I think that's what's expected at this point, because in the end, he wants a good economy. His Republican Party wants a good economy because they need to run again in a year, so a year and a half. So I think they have to have an eye on the economy, and the budget is not passing through because the Republicans are themselves objecting to the tax increases. So spending increases rather. So there's a lot of ifs, ands, and buts at this point. Yes, it is affecting. It is having a damper on the investor sentiment. It's not outright bullish, but it's not negative yet.
Santosh, I'm going to come back to him, given to understand Arnab Das has in fact joined us. Arnab, thank you very much for your time and joining us here on ET Now as well. With the US GDP down 0.2%, are we seeing early signs of policy-induced stagflation risk, according to you?
Look, I think there's an element of that, right? What happened, I think, to drag down GDP growth in the first quarter was a significant increase in imports, which sort of arithmetically drags down growth. But that's not really a very useful indication. I think the bigger issue is that we've had a lot of policy uncertainty, which got going in the first quarter, but really took off with Liberation Day and all the volatility around the tariffs in the first weeks of April, which is after the Q1 GDP report, period, right? So I think we have yet to see the full effect of all the uncertainty to do with trade policy and all the uncertainties to do with what you might call the culture war. And the broadsides that the Trump administration is taking against American institutions and kind of the way of life in many respects that they would like to change. I think some of the uncertainty has been subsequently reduced, right, by the rollback from the extreme levels of tariffs announced against China, and also the full whack of the reciprocal tariffs that were very sharply escalating to the baseline of 10%. And now we've had another, last night, another legal intervention by which a U.S. court has ruled Trump's use of the that so-called IEPA Act as unlawful. So, that will probably delay the onset of clarity on the trade war. But also perhaps the damaging effects of the tariffs and the trade war themselves to some extent, at least as far as markets are concerned, right? Because we seem to be stabilizing. On top of that, we have these fiscal issues that you were just discussing. I think if you look at the markets, what you're seeing is the 10-year bond is in a range. There's been some weakening in the dollar, maybe a significant amount of weakening in the dollar. And stocks are down on the year, although not that much. Barely at all. The bigger issue, I think, in a way, is that other currencies other than the dollar, including some emerging market currencies, and other equities, including some emerging market equities, are doing fairly well. Right. So we have a bit of a kind of soft dollar, bullish rest of the world environment going on. I think that's partly because that's normal and natural, or at least we're used to it when the dollar weakens. I think part of it is that there's a rise in home bias, if you like, right? That investors are pulling money out of the U.S. and putting it to work to some extent back at home, whether that be in the Eurozone or Japan or even in some emerging market countries, right? And so I think we're seeing perhaps some expectations of a rebalancing of global growth, maybe less dependence on US growth. Of course, it's early days yet, and there's still a lot of overhang of uncertainty, but I think that seems to be the general direction of travel. US is slowing down. Maybe it'll slow down more sharply if the trade war escalates again. There's a lot of uncertainty that will have some negative impact on investment and on consumers, particularly on durables. And to some extent, the rest of the world will pick up some, but maybe not all of the slack. So it's maybe a bit more of a challenging growth environment, but not terrible. And I think that's what you're seeing playing out in the markets.
And that's more or less how Santosh was also looking at in terms of this particular situation. But Santosh, coming back to you after hearing, of course, how Arnab's looking at this, in your opinion, how much weight would you give it to the import surge as a reflection of domestic resilience versus external balance?
Yeah, I think the point about imports, there was a lot of pull forward, especially expecting massive tariffs. A lot of companies pull forward their imports, and that's why you saw, and net imports is a negative on the GDP calculation, and that's why you saw a little bit of adjustment there. I agree with that. But I think going forward, I think things should improve. I don't see any major disruption to the business as such. US companies will do well going forward. The export market, I mean, suddenly US did not become bad. It was just all this noise of going around. Yes, we were inflated in terms of valuation and all that, but there's a little bit of pullback that was expected, and that's healthy. But overall, I think US will hold its own. They will hopefully Trump will really be very consistent and very rational in his policies and be very constructive for the rest of the world. And everybody wants to come here because the demand is here. And yes, emerging markets and all that will come back because they were on a relative basis, they were down. They will come up. But US will hold its own. It'll drive the whole economy forward. So I'm not expecting recession of any kind. I'm not expecting any major disruption. Maybe a slowdown, which is fine, which is expected. But net, I think we will be okay, and the global markets will be okay down the road. I don't see any.
All right, so nothing to worry about in your opinion, Santosh. But Arnab, circling back to you, given what Santosh is saying, it looks great in terms of the trajectory as well. But how do you, in your opinion, interpret the dip in government spending? A strategic cut, or is it a concern for future growth?
Look, I think that was a time when there was a lot of efforts by DOGE, so-called Department of Government Efficiency, to cut spending in various ways. And some of those ways of spending cuts are likely to persist for a while. Some of them are being challenged as to their legality, and some of them have been sort of revised away, if you like. Because DOGE was not able to make all the cuts in personnel or in spending that maybe Elon Musk at the time had intended. And so I think that's why we had a bit of a flip around in the last couple of weeks from real fear and concern around, focused almost exclusively on the trade issue, to all of a sudden flipping on the fiscal issue, because we've got this one big, beautiful bill through reconciliation that would lead to a significant level of deficits being extended at the current rate of 6.5–7% of GDP as far as the eye can see, and maybe beyond, without some of the offsetting spending cuts that they had clearly intended to do through DOGE and other efforts to help bring the balanced budget, or the budget closer to balance, not to balance. I think where we are now is that the market is digesting that. 10-year bond yields have moved around quite a bit. Very long end of the curve from 10 years to 30 years in the US and elsewhere in the rest of the world, it has to be said, has steepened meaningfully, right? Including in Japan, which, although it has a large budget deficit and a large debt, has a current account surplus, is a high savings economy, right? So you have a lot of these fiscal pressures showing up in the long end of yield curves all over the world and in so-called term premia. So there are these challenges in the US. There are also similar and other challenges in other parts of the world. So I sort of agree that it's not going to be that bad. I don't know if I would be outright bullish because I think there are still a lot of uncertainties, and I think we need to recognize that the trade war, although it's been constrained by Trump's own pullbacks and now
Right,
by these
Arnab.
court
So
rulings,
I guess
it
in
is
a
still
nutshell,
there.
what you're trying to say is that, of course, there are challenges, but going forward, we might look at this situation get better, but that, of course, only time is going to tell. But for the